Hello, investors, and welcome back to the channel. Today, we are diving deep into the latest numbers from a real giant in Asia's banking world, DBS Group. Just recently, Singapore's biggest bank dropped its earnings report for the second quarter of 2025. And oh boy, the results paint a super interesting picture of how a company can stay strong even when the economy gets a little shaky. So why should you care? Well, DBS is a huge deal. Think of it as a thermometer for the economic health of Southeast Asia. How they're doing gives us massive clues about interest rates, how people are spending, and just the general mood of the market. And a little spoiler for you, despite some pretty serious headwinds, DBS managed to not only beat what the experts predicted, but its stock also hit a brand new record high. So, is DBS a clear buy right now? Or are there some risks hiding under the surface? We are going to break it all down. But first, before we get into the nitty-gritty, here's that super quick but super important disclaimer. This video is for your information only, and it is definitely not financial advice. You should always do your own research or chat with a licensed financial advisor before making any big money moves. Okay, you ready? Let's do this. DBS Group is the biggest bank in Southeast Asia when you look at assets. They're based in Singapore and they're right in the middle of all the action in places like Greater China and, of course, Southeast Asia. They do everything from your everyday banking and wealth management to handling the massive accounts of huge corporations. Now, let's talk about the world they've been living in for the past few months. Let's be honest, 2025 has been a bit of a roller coaster. The global economy has been bumpy, key interest rates have been falling, and currencies have been all over the place. And on top of all that, there's a new 15% global minimum tax, which adds a whole new challenge. The CEO even called it a tough quarter, and it's in this tricky environment that DBS had to find a way to win. So, how did they actually do? Let's get to the good stuff, the headline numbers for the second quarter. Total income, it rose 5% from last year to a very nice 5.73 billion Singapore dollars. Profit before tax, that also climbed 5%, hitting 3.39 billion. And the big one, net profit, came in at $2.82 billion. That's a 1% increase from last year. Now, that might sound small, but given everything going on, holding steady is a huge win. And for the first half of the year, the picture is even better. Income and pre-tax profit hit brand new highs. And here's the best part for shareholders. DBS declared a Q2 dividend of 75 cents per share. That's a 60-cent regular dividend plus a little bonus, a 15-cent capital return dividend. You love to see it. Okay, but where did this performance actually come from? A bank's income is never just one thing, you know? This quarter is really a tale of two different stories. On one side, you have net interest income. That's the classic way banks make money, the difference between what they earn on loans and what they pay you for your deposits. That part actually fell by 4%. And the reason is pretty simple. Market interest rates have been dropping, which squeezes their profit margins. But, and this is the important part, DBS played it smart. They used financial tools, hedging it's called, to protect themselves. And they also saw a big 7% jump in customer deposits. So more people are trusting DBS with their money, which helped soften the blow. Now, for the other side of the story, the other income streams. This is where things get exciting. Fee income shot up 11%. A huge part of that was a 25% surge in wealth management fees. People are clearly still active and they're using DBS to manage their investments. And then there's markets trading income. This more than doubled to $418 million. The bank really took advantage of a better trading environment. So you can see the pattern, right? The core lending business felt some pressure from lower rates, but the wealth management and trading divisions totally stepped up to save the day. This is the part that investors really get excited about. How did DBS do compared to what the experts, the analysts on Wall Street, were expecting? Well, they absolutely crushed it. That final net profit number of $2.82 billion, the analysts were only hoping for something around $2.77 billion. It might not seem like a huge difference, but beating the consensus like that is a really powerful signal. It tells investors that the leadership team at DBS has a better grip on their business than even the experts thought. That builds a ton of confidence. To really understand the story behind the numbers, you always want to listen to what the leaders are saying. The CEO, Tansu San, sounded confident and honestly pretty proud. She said, and I quote, "We delivered a strong set of results for the first half despite the challenging environment." She pointed out that their ability to be nimble, grow deposits, and grab market opportunities is what helped them fight back against all the external pressure. She even added, "While external uncertainties remain, we have opportunities ahead of us." This isn't just fluffy CEO talk. It's a direct message to investors. She's saying, hey, we know things are uncertain, but we have the right strategy, we have the right tools, and we are ready for whatever comes next. That's exactly what you want to hear. So what about the future? What's the outlook for the rest of 2025? Amazingly, DBS kept their full year guidance the same, which shows just how confident they are. Here's what they're expecting. First, they think their net interest income will actually be slightly above 2024 levels. This means they expect to get enough new loans and deposits to make up for the lower rates. Second, they see their other income from things like wealth management growing in the mid to high single-digit range. So more good news there. But here's the key thing you need to know. They expect the full year 2025 net profit to be below 2024 levels. Now, before you panic, this isn't because of bad performance. It's almost entirely because of that new 15% global minimum tax. It's actually great that they're being so upfront about it. They're telling investors, our business is strong, but just be ready for this new global tax to affect the final number. So, how did the stock market react to all of this? Well, let's just say investors were very happy. Right after the announcement, DBS shares shot up, hitting a new record high of $50 during the day. This tells us that investors were seriously impressed by the earnings beat. And that bigger dividend, that was just the cherry on top. In a market where some other banks are getting nervous, DBS stood out as a solid, reliable winner. Okay, let's put on our analyst hats for a minute. What does all of this mean for you, a potential investor? Let's look at the good news first, the bull case. One, this company has so many different ways to make money. When lending got tough, wealth management and trading soared. That makes the bank super resilient. Two, the management team is excellent. Their smart moves to hedge against lower rates really paid off. That's a sign of a team that knows exactly what they're doing. And three, they are giving back to shareholders. That bigger dividend and the stock buybacks are fantastic for anyone looking for a solid income investment. Now, for the other side, the things to keep an eye on, the bear case. One, those external uncertainties are real. Things happening around the world could still cause problems. Two, the pressure on their core lending business is still there. If interest rates stay low for a long time, it will continue to be a challenge. And three, that global minimum tax is going to cap their profit growth this year. There's no getting around it. So, what's the final takeaway? DBS has shown that it is an incredibly strong and resilient bank. They've proved they can handle a tough economic climate by being smart and diversified. For investors, it looks like a story of high-quality management delivering solid results. The biggest risks seem to be less about DBS itself and more about the wider world economy. And that is a wrap on DBS's very impressive second quarter earnings for 2025. They faced a challenge, beat what everyone expected, and made their shareholders happy, sending the stock to a new all-time high. So, what are your thoughts on DBS? Are you feeling bullish on the future of banking in Southeast Asia? Let me know what you think down in the comments below. I'd love to hear from you. And hey, if you found this breakdown helpful, do me a favor and hit that like button, and make sure you're subscribed to the channel for more deep dives just like this one. Thank you so much for watching, and I'll see you in the next video.